Welcome back to Money Life, where it's time now for our big interview. Joining me today, Giles Coghlan. He is Chief Currency Analyst at HYCM. If you want to learn more, HYCM.com to learn about him and the firm. Joining me from England, Giles Coghlan. Giles, great to have you back on Money Life.
Yeah, Chuck, it's great to be back. Looking forward to talking through some exciting moves we've been seeing in the market recently.
Well, let's talk about those moves, because quite honestly, your excitement might be different than someone else's, because you do this professionally. And folks like me or my audience, we read about it, hear about it, and go, oh, is that actually happening? And how might that be good or bad for me? So break it down. I mean, what do you find exciting, and is exciting actually good when it comes to currency right now?
Well, it's to do with finally seeing some movement in central bank interest rates. Since we had the COVID-19 crisis, central banks around the world have been dropping their interest rates, so everyone's in the same flat pool of very low interest rates. What's exciting, Chuck, is that now we're starting to see central banks move. And by central banks moving towards raising interest rates, that means we're suddenly getting some currencies moving. And from my perspective, when currencies start moving, it gives you opportunity to take advantage of those movements. And the major currency that is very, very weak at the moment is the Japanese yen. And the reason it's weak is because the Bank of Japan is one of the least likely central banks to increase interest rates. So it means that lots of currencies are gaining against the Japanese yen right now, which means some really good potential for some medium, long-term opportunities, which your listeners may be better placed to take advantage of, because it could be moves that last for weeks and months rather than hours and days.
Okay, but if we're in an environment where we know that the market weighs in and is a weighing machine, and so much of it is based on sentiment, and the Fed here is telegraphing its moves, and basically the rest of the world is trying to telegraph its moves, shouldn't these be boring times and unexciting times?
Well, if only that was the case, because you've got so many risks in the market that's adding to the volatility. So there's been that company in China called Evergrande, this property group that was at risk of defaulting. That had investors very worried that it could be potentially another Lehman bank scenario, a collapse that resulted in significant knock-on impact. Now, that doesn't seem to be the case, but it's a risk. There's high inflation. Inflation readings over the last couple of weeks have been ticking up higher across the world. Even Japan, which has had very low inflation for years, is showing inflationary pressure. We have the concerns over Brexit rearing its head again in the UK, with the UK trying to renegotiate the Northern Ireland protocol. There is this wall of worry that's out there and risks inflaming markets again. So I think there is a lot of excitement going on, and no one really knows exactly how far and how much inflation is going to rise. How much is it to do with supply chain issues? How much is it a more systemic problem? How much is the energy crisis with natural gas prices in Europe soaring higher? Is that going to really impact inflation as well? Is that a longer term issue? How is it going to affect Europe's relationship with Russia? How is that going to affect US and Russia relationship? All these sort of unknowns at the moment. So they are exciting times, and they're dynamic times, and they're changing times. So there is a plenty of opportunity amongst the confusion.
Let's talk about something else that can add confusion. Inflation. Yeah. We've heard transitory, but transitory and the meaning of transitory is clearly changing. And especially as we have global supply shortage and supply chain issues. So how is inflation affecting the currency markets? And in your opinion, as somebody who is investing in currencies, is transitory even a thing? Because in my experience, guys who are investing in, or even more so trading currencies, have the shortest attention spans possible. Transitory would have to be like 6 seconds. Transitory would be, what do you say now? By the end of the conversation, okay, it's over.
Yeah, Chuck, you're spot on. That's a very sharp insight. And I think that's because most opportunities come from those very short, sharp changes in sentiment. There's a saying, isn't there, that God made economists to make meteorologists look good. In other words, as soon as you start to project more than a few hours and a few days ahead, it becomes very difficult. So that inflation being transitory has dropped from the Fed's narrative. The Reserve Bank of New Zealand talked about cost pressures rising. Governor Bailey over the last weekend said that inflationary pressure is a concern and a worry for the Bank of England. So that idea of inflation being transitory is largely disappearing now from central bank speakers' rhetoric. So yes, that is definitely pushing to the side, and the results have been quite marked in the currency markets. Bond yields have been moving sharply higher for the simple reason that investors are expecting central banks to increase interest rates to control inflation. Remember, there's only really one tool a central bank has to control inflation, and that is to raise interest rates. But the bigger question, and this is the question that I don't know the answer to, which is to what extent will the central banks raising interest rates control inflation that's due to supply chain issues? Remember, this isn't inflation due to general reasons. This is specifically due to supply chain issues. So the risk is that the central banks don't actually have the tools, and that they'll be raising interest rates to control inflation, but the inflation will keep rising because it's a supply chain issue. Now, that means demand could be hit. If that happens, then we could move into a stagflationary environment. That means we have high inflation but low growth. And that would be a sort of a bad scenario for global growth and would move away from that reflationary narrative that most people are expecting. So that's the big discussion going on at the moment. Are we in stagflation or are we in a reflationary environment? And what can we do to change that environment? And what can central banks do? And the answer is not very much at the moment, just ride out the storm.
Riding out the storm. What do you do to do that? I mean, storms in currencies, do you just hunker down in the dollar because that's the safest place to be? Do you say, hey, there's a storm? Crypto's kind of stormy, but crypto's also kind of meant to be something that can be an alternative in the storm. How do you ride out the storm?
Yeah, I think you want to focus on those central bank differentials. So at the moment, the Bank of Japan, and we've just had Japanese elections with promises that the capital gains tax is not going to be used. Japan's PM wants a weaker yen. The Bank of Japan talking about further monetary easing policy. Central banks around the rest of the world are thinking or moving towards raising interest rates to control that inflation. So that means going long CAD yen makes a lot of sense. Oil is rising for some significant supply and demand reasons. So something like a CAD yen long makes sense over the medium term. If we see stagflation, but Chuck, you see, if we don't know. So if we see stagflation, then dollar buying makes sense. And maybe looking at gold makes sense as well. So gold could be another investment in a stagflation environment if we get there. For me personally, I'm just looking for that central bank divergence. So dollar yen upside, dollar yen from 112 makes sense. New Zealand dollar, Japanese yen makes sense. RBNZ is expected to raise interest rates 4 times next year. So the Bank of Japan is not expected to raise interest rates anytime soon. So CAD yen, New Zealand dollar yen, even the Australian dollar is coming back now from its record short sold position. So anything against the yen pairs right now makes a lot of sense.
And I know that crypto is not what you specialize in by any stretch of the imagination, but it's part of every conversation right now. Where should it be in all of this? With all of these things going, is there something that you're waiting to see crypto prove in these conditions? Like, hey, with all of this excitement, what's the expectation that would help you say, hey, I don't just see crypto as something that everybody else is talking about. I see it as something that everybody must be looking at that much more heavily.
I think for me, for Bitcoin in particular, I look at that in a very technical way. Now, I don't trade a lot of Bitcoin, but my best trade last year with my own private fund was going long on Bitcoin. So I'm not adverse to the product, but it is just another financial instrument. I wouldn't call myself a Bitcoin believer. I don't fundamentally have a belief in it as an alternative, form of currency exchange. But there's one level that I do like, Chuck, and that is there's been a potential trend line broken on the weekly chart. And any retracement back to that 50,000 level, I would expect to find buyers on a first test. So that level for me is key. It's significant enough. It's big enough that a lot of traders around the world would be seeing the same thing. So just expecting dip buyers from around 50,000 makes a lot of sense to me technically, because risk can be very closely defined. You could have a stop just running below 45,000. And with a stop running below 45,000, you can limit your risk. Now, you have to be careful that you are not using leverage on that trade, but because a $5,000 stop is still pretty large, okay? But technically, it's a decent level where you would expect to find dip buyers. And if we do see a stagflationary environment, then you would expect Bitcoin to keep rising. Many have been touting it as an inflation hedge. And, what did we go through in COVID-19 was an acceleration into the digital. What is Bitcoin? It's a digital expression. So I think Bitcoin has captured the moment. It's also maybe part of a wider shift towards digitalization, and Bitcoin does capture that. So I think it's on trend and it's in vogue. And I would expect to see, alongside the conservative investors, I would expect to see retail traders buying into the 50,000 too.
Okay, Giles, we're out of time, but thanks so much for joining us. We will talk to you again soon. Giles Coghlan is Chief Currency Analyst at HYCM, hycm.com.